All right, today we're diving into a completely new way of thinking about getting e-bikes out into the world. You can just forget everything you've seen before because this is a totally different system. It's designed from the ground up to be zero interest, funded entirely by grants, and maybe most importantly, built on a foundation of solid verification. And this quote, well, it gets right to the heart of the matter, doesn't it? I mean, we all know the demand for e-bikes is absolutely off the charts. That's not the issue. The real challenge, the thing that's holding this whole movement back, is creating a system that big institutions, banks, governments, insurers, can actually trust and invest in for the long haul. So to really get why this new solution is so different, we first have to talk about the problem it's trying to solve. And right now, the biggest problem is how we subsidize e-bikes. I'm talking about the deeply, deeply flawed voucher system. Look, people are desperate for e-bikes. Every time a state or city opens up a voucher program, it's just flooded with applications in minutes. But the model itself, the whole idea of just handing out one-time vouchers, is fundamentally broken. It's like trying to fill an ocean with a thimble. It just doesn't work. 100,000. Just think about that number for a second. In California, 100,000 people were stuck in a queue for just 1,500 available vouchers. Now, that's not just high demand. That is a clear signal of total system failure. The structure just can't handle the load. So let's break down exactly why these voucher programs fail. First off, they're just one-time cash handouts, not sustainable systems. Because of that, they don't verify if the bike is ever actually used. They don't build any kind of lasting relationship with, say, a financial institution. The money is spent once, and poof, it's gone. And this is the big one. They produce zero reliable data that partners can use to measure any real impact. Okay, so if the whole voucher model is a bust, what's the alternative? This brings us to the proposed solution, a complete system they're calling Slingshot. The entire system is anchored by a really smart choice: community credit unions. I mean, think about it. These are regulated, trusted financial institutions that are already laser-focused on serving their local members. So instead of a temporary subsidy, this model builds permanent infrastructure right inside the community. And it all works as a three-party ecosystem. It's pretty elegant. You have the dandy horse, and they provide the core verification technology. Then you have the credit union acting as the lender and, crucially, owning that member relationship. And finally, you have an advocacy partner, like a local bike group, that handles all the outreach and community building. Everyone has their own clear, distinct role. So what's the secret sauce here? What makes this whole ecosystem even possible? Well, it all comes down to the engine running under the hood: verifiable, audit-grade data. This is the million-dollar question, isn't it? I mean, anybody can track a ride on a fitness app, but how do you make that data so reliable, so bulletproof, that a bank or an insurance company would actually be willing to bet real money on it? Well, the answer is a patented system called VIDAT. And let me be clear, this is not just another tracking app. It's a whole verification protocol designed to turn a simple bike ride into a data event that is solid enough for the worlds of finance and compliance. And this chart just nails the difference. A fitness app, it uses a single GPS signal. It's basically faith-based. You just have to trust what the user tells you. But audit-grade data is built to withstand real scrutiny. It uses multiple signals to create an unchangeable record that's tied to a real identity. It's really the difference between a personal diary and an audited financial statement. And here's how it builds that institutional trust. It's a 5-step sequence, and all 5 elements have to line up perfectly. First, the rider taps their credit union NFC card to prove their identity. Second, their phone confirms they're actually there. Third, the specific bike itself is verified. Fourth, secure timestamps are locked in, and only then, as the 5th and final step, is the GPS and motion data captured. There's no single point of failure. Okay, so we've got the institutional partner, and we've got the verification engine, but how is all of this funded? This is where the model gets really clever. It's all about stacking grants. This right here is the biggest shift in thinking. Instead of using grant money to subsidize individual bikes one at a time, Slingshot uses that capital to fund the entire institutional infrastructure, the whole shebang. It's a one-to-many investment that builds a permanent asset that can serve the community for years. And the amazing thing is, the money is already out there. The Slingshot model is specifically designed to tap into existing pipelines of cash, from massive EPA funds all the way down to smaller community grants from groups like the AARP. It's just about connecting the dots. So what does all this mean for the credit unions? Well, for them, this is the magic number, 0. Because all of the pre-deployment work and the setup fees are structured as grant-eligible expenses, their net cost to launch this whole platform and acquire a bunch of new members can literally be 0. The risk is essentially designed out of the system for them. And this brings us to what might be the most important part of this whole story. Where does this project actually stand today? Let's talk about the blueprint. This is a direct quote from the creators, Dandy Horse, and it's so important to understand. What we've just walked through, it's the architectural plan. It's the scaffolding for something new that hasn't actually been built yet. So let's be perfectly clear. This is an idea, not a product you can buy off a shelf. Dandy Horse is pre-revenue. The code isn't written yet. So when they talk about plugging in or invoicing a grant, you should really be picturing a sketch on a whiteboard, not a finished app. I mean, it's a level of honesty and transparency you almost never see. So this isn't a sales pitch. It's really an invitation. The creators have drawn up a very detailed map, but they're actively looking for partners, for pioneers, to help chart the final course and actually, build the roads. What you see here is a fully formed concept, a detailed architectural plan just waiting for the right builders, the right credit unions, the right advocacy groups to pick it up and make it real. As of right now, no one has signed on. And that leaves us with this final powerful question. The problem is clear, the demand is absolutely undeniable, and now a potential blueprint for a sustainable, scalable solution exists. The only question left is, who's going to be the first to build it?